Okay, hello everybody. Welcome to Create Atlanta Mentorship. Can you believe that we're almost already at 2025 and this channel's only about a year and a half old? 2023, 2024. Now we're going into 2025. Amazing. Okay. Here's the thing, right? I don't have specific goals that I make for like the new year, but I just have goals in general, right? And this is the goal that I want you to have going forward if you don't already have it. There's two types of problems that I talk about in this channel. Number one is poor people problems. Okay. And what's the difference between poor people problems and then the number two type of problem, which is rich people problems? Poor people problems is when you don't have money and you can't go to sleep at night. That's poor people problems. Rich people problems is when you have too much money and you got something annoying to deal with. That's rich people problems. Okay. Yesterday I got a ticket because I went over a stop sign and I forgot to stop because there's a new stop sign in my neighborhood and I didn't realize it was there. Police caught me, right? I admit it. Okay. And when he gave me the ticket, I just felt absolutely no emotion because it's like, man, I'm at the rich people problem level, right? That's what I want you to experience too. The rich people problems. Okay. What's another rich people problem? Me getting too much credit. I remember when I applied for business credit, the bank was like, "Sorry, we can't give you credit. You got too much." I was like, dang it!" But could still go to sleep at night. And here's the thing: why can we not go to sleep at night? Usually, it's because we got too much debt. We got too much debt. I mean, take a look at this person making good money, and I get emails from you folks about how you make good money and you're still broke because you have too many debt payments, right? So this person has four credit cards, two auto loans, a student loan, a mortgage, and how many debts is this? One, two, three, four, five, six, seven, eight, eight debts. And then here we have food, gas, insurance, and all the other good stuff that's not debt that we're always going to have to pay for. Okay. But what's the big problem here? We can't sleep at night. So this is like poor people problems. Now we can easily go from poor people problems to rich people problems once the debt is paid off. And that's what we're going to do today with velocity banking. So just another excuse for me to do velocity banking and make that sweet, sweet YouTube money of $4,700. I'm super rich now. No, I'm just kidding. Well, maybe I am. I don't know. I do play one on YouTube though. Okay. So let's get to it. So what's velocity banking? All it is a debt payoff strategy where you use your line of credit as your main operating account. So what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. And take a look at this. My line of credit for $280,000. Some people are like, who would give you that? Folks, there are over 4,000 banks and credit unions in this country. I don't know if you knew that. There are over 4,000. You're not in Canada. No offense if you're in Canada. But if you're in Canada, there's only like big six big banks, and that's it. In this country right here, if you're in the United States, we gotta have a 4,000. I get this from a credit union. $280,000. And what's the number one rule when it comes to getting credit? Banks don't lend money to people who need it. I have to brainwash you with that. I don't want a stupid thought like, well, I'm gonna get the money when I need it. And I'm like, "What? Okay, that makes no sense." Then that's how I have over $575,000 in lines of credit, okay? So, if you just brainwash yourself today and going forward and the new year over and over again, you may, I'm no guarantees, may able to get huge credit lines like this. This is a home equity line of credit, which I also call my Infinity Gauntlet, which is a picture of me here wearing my Infinity Gauntlet, aka my home equity line of credit. And so when I wear it, I go to the bank's website. I could literally just dump $280,000 into my checking account. $280,000. And these days, that's not so big to me, right? One day I'm going to have like $1 million line of credit. I know it. And I'm like, $1 million? That's not enough. And that's when you know you've really gotten to rich people problem territory. Okay. Rich people problems. So, all right, let's get to it. We're just going to make this unrealistic assumption right now that we have, we'll say $80,000 line of credit, $80,000. Okay. $80,000 line of credit. So, what is a line of credit? I just told you we're gonna make it's just like a credit card. In fact, a credit card is a line type of line of credit, but there's personal home equity. Okay. but we're going to assume we have access to 80,000. In fact, let's go up ahead and sum up how much credit card debt we have. So 27 plus 35 plus, whoopsie, plus 10 plus 15. So it's 80. Actually, to make this easy, I'm just going to put this as 90,000. See, that's how I cheat. I work backwards, right? And then some of you are like, well, what if you don't have that big of a line of credit, right? Again, that's what the paid membership is for. So the more you pay, the more I go into details. These are like Costco demos, right? I give you the sample, okay? I'm not going to give you the whole shebang just because it's too much work. If you're not going to pay me, that's cool. It's not worth it to you. You ever notice that people sometimes do this thing where like um they want your service, but then they get offended that you have to pay. Like, you're gonna do all this work for me, and look at my financial situation, and I need to pay. I'm like, well, then don't do it. You know what I mean? Like, people get all worked up about whatever, but that's probably because you got poor people problems, and if you're rich, you would never do that. All right, so now let's go ahead and do this. Okay, so we're gonna have the same income, same expenses, and this is what I always say, that we got to put our big boy pants on. What's our big boy pants? No savings. That's the thing that trips up most people, where it's like, I gotta have some money in my savings account, and I don't have any money in my savings account. None at all. Why do I need money in my savings account for? Don't need it, right? Because I got my line of credit, which is my new savings account, right? And what we're gonna do is move some of this debt, which I think was $87,000, into that line of credit to maximize this thing called cash flow. So let's go ahead and move it, $87,000. And then what happens with the credit cards? Bam, 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 right? Look at that. Now we went from 117 to $3,000 of cash flow. And then the final step was we put the entire $7,500 into the line of credit, take out our expenses, and then after every single month, our cash flow is about 2,900, which will be the amount that will reduce our debt. See how easy that is? Again, don't overcomplicate it, right? So we're going to get the next month's balance, which is based on the previous month's balance, previous month's interest, minus our cash flow, 2947.61. And then what we're going to do is we're going to take the average daily balance. Let's take the averages right here, multiply it by the interest rate, which is 0.08 divided by 12. And right, let's go ahead and do that. And then now what we do is copy and paste, and then we just wait for when it goes to this red number. Red. We're almost there. And so we see in a little bit less than 3 years, we paid about $87,000 of debt. 87,000. See how easy that was? Oh my goodness, that was so easy. 87K. And how much was that? 33 months. 33 months. Okay. 33 months. And all right. Okay. So now after 33 months, let's just go ahead and do this. Type this here. All right. And take a look at these. Ooh, I like this. All right. So cheat code, if you want to know which debts to pay off, just use the cash flow index, and anything under 50 should be a good candidate. I love these numbers, 25. Let's go ahead and do it. All right, so how much is that? Let's go ahead and sum this up. So G2 plus G3, 21 grand, and then we're gonna pay off 21 grand and move it into that line of credit right here, which is plus 21,672.89, and now this is completely paid off. Okay, this is completely paid off. Guess what happens to these? 0, 0, and now our cash flows 3,799 and 17. Okay, so let's go ahead and do this and do our new cash flow. So 3799.17. All right, and then we're going to copy and paste. Copy and paste, and now in 39 months, it's all gone. These two auto loans, oh my goodness. 39 months, 39 plus 25 plus 20, and wait a minute, did I screw up? 39, no, it's 87, my bad. 87. Okay, all right, so it's 132k. 132k. Okay. So now in 39 months, right? 39 months. So this is now 0. What's the balance of these? All right. So let's go ahead, and I'm going to be a little bit lazy here, even though I don't necessarily recommend this. It's not going to be a big deal at this point. I'll move this into the line of credit, and let's go ahead. Whoopsie, what am I doing here? We're going to get the student loan right here. Okay. And then do plus 36947.37. And what's our, this one right here? Now our cash flow is over 4 grand. Can you believe it? Oh my goodness. All right. So now 4356.79. All right. And then that's our new cash flow. So at 48 months, all right, 48 months, it's all paid off. That student loan, 48 months equals 132 plus 50. And that's 182K, 182K, all right? And so now after 48 months, what do we have here, right? We got a loan. And here's the thing, we don't want to move this loan into a line of credit, right? Because it's a huge interest rate difference. And if we move it into a line of credit, how much cash flow are we getting back? This little bit of $843. However, just be aware, if this loan goes to full term, 360, look how much interest you pay. About 50%, $100,000. Now, some people are like, well, I could invest in other things, but here's the thing. If we could just pay this off and not be mortgage free, then that's just as good. Like, I think that's like a guaranteed safe way of just going through paying off your debt, because what's people's most expensive monthly payments? Their housing costs, right? And so again, you may want to keep the debt and maybe invest in real estate, but the safest bet is just to pay off all your debt, including your housing. Okay. So 48. And so the way that we'll do this is what we use to call the chunking method. So basically a small portion, we'll just say 8,000, goes into the line of credit plus 8,000. And look how long it takes us to pay that 8,000, 2 months, right? Whereas how long did it take us to pay off 8,000 here? I don't even know, right? I don't, it's, I could look it up in a mortgage amortization schedule, but it's probably going to be a long time to take that 8,000. All right. So luckily we have this velocity banking calculator here. Give me one moment. And with this calculator provided by Renatus, which is where I originally learned velocity banking from, um, what? Okay, so before I keep going, I just want to make a quick plug for Renatus. So, what is Renatus? It's an education company online where I learned all this cool stuff, including velocity banking. So, if you're interested in learning, in addition, other things to velocity banking, click the Google form link below. That's my quick plug. And also, I get commission, right? So I'm trying to get some of make my rich people problems into richer people problems. So if you do that, then um, yes, I'm doing you a favor by it's kind of narcissistic, but you should have this mentality too. If you're selling stuff, I'm doing you a favor by you making me richer, right? Because I provide value. That's how it works. Okay. So, we just got to plug in all of this good stuff, and oh, 825520. That's interesting. Did I already put this in or did I not? Actually, I just think it's a coincidence because this was like, all right, so let me make the income 7,500 and the living expenses will make it 2,300. Okay, yeah. Oh, that's interesting. All right. All right. So 3.1 years. 3.1 years. Amazing. Okay. So, all right. Now I just got to copy this. 3.1 years. Now let's just do this. Let me put this whole thing into the line of credit. See how it's 26 grand versus 9.5 grand. That's why you don't want to move your entire thing into the line of credit. Now, because this person has so much cash flow, even 26 grand wouldn't be that big of a deal, but you don't want to ruin it, right? 9.5. All right. So let's go ahead and 3.1 years. We paid it off. So 48 divided by 12 plus 3.1. That's 7.1 years, and we are debt free. So that's 382K. And all right, so we are completely debt free, and we have now accomplished our new 2025 goal, if that's not already your goal, to have rich people problems, right? Because what's rich people problems is when you got too much money in your savings account. So let me just kind of go here. We're debt free, and then guess what happens? Oh, month one, right? So month one times C5, we have $5,200 in our savings account. And then month two, we got 10,400. And then month three, we got 15,000. Now it's like we have rich people problems because we know that if we keep our money in our savings account, it's just idle. It's just doing nothing. It's like, ugh. It's like the exact opposite reaction you'd have when you're poor, right? When you're poor, you're like, I want a savings account, an emergency fund. When you're rich, it's like, ugh, I just got money in there doing absolutely nothing. Rich people problems, right? And that's why it's easier to raise money from rich people than it is poor people. And it's probably why the SEC, I think they make a lot more rules regarding people who are not accredited investors versus accredited investors, right? I don't know the rules. I've never raised money, right? I just use the bank's money because I don't need money. It's like an easy source of funds. Okay. All right. So now, as you can see right here, right, 15,600 3 times C5. Yeah. Just, after every single month, let's say we did this for 6 months, would be like 31 grand in my savings account, and it's only growing at like 3% or 4% with the high yield. I need a little bit more. I need that 10 to 12, right? That's the rich people problems. Hopefully you experience that. Hopefully, I'm not even saying hopefully. Probably shouldn't say that, but one day if you get a parking ticket, you'll be like, whatever. Kind of like celebrities. But the bad thing about celebrities is because they're disorganized, they sometimes go to jail because they had all these parking tickets and they forget to pay them. It's not that they can't pay them, it's just they forget. That's the reason why they go to jail. Okay. That's probably what's going to happen to you if you have too much money. You get a parking ticket, you're like, oh, whatever, I'll pay it. And then because like those systems don't automatically have it available, you need to wait like 10 to 15 days to pay the bill. That's why a lot of people forget, right? True story. All right. Okay. Well, that's it for today. It's Korean Atlanta Mentorship. Again, almost at 2025. And this is going to be the biggest, okay, Korean YouTube channel in Atlanta. I think it already is, to be honest. But in 2025, we're going to keep it that way. Okay. All right. Well, have a great day. Almost Happy New Year.